Welcome to Live and Buy in Texas. I'm Cynthia Corder, your host, and we are in the studio today with one of my friends and a mortgage lender, one of my preferred mortgage lender, Geoffrey Weil.
Yes, ma'am. Good to be here, Miss Cynthia. I've been looking forward to this. So.
Yes, thank you for coming.
Most welcome. Thanks for having me.
So you are my mortgage guy. I have several lenders that I work with, but you are definitely my preferred because you really follow up. So I know that personally, and I tell this story a lot to everybody I probably introduce you to.
It's kind of our fun story.
Yeah. So do you remember how we met?
Yeah. So I remember originally I had been doing some open houses, and I remember you had popped in with a client. I got a chance to meet you in person. And it was funny because I had been doing some door knocking, as they say, going from brokerage, introducing myself, trying to meet some new partners. And they had, when I walked into yours, they had said, man, you got to meet Cynthia. And I thought to myself, I think I may have met her before. And turns out we had met at that open house. And so I kept popping in. I was like, well, I'm going to come back in here because, I want to see her again. And every time I come in, you'd be out in the field, say, oh,
right.
she's showing a house or this, and say, keep trying though, you're going to get her. And so I remember once I left some cookies behind, I was like, hey, I'm going to show her, really want to get a chance to connect. And I think it was literally a year later.
It was a year.
It was about 1 year. And so it just shows that whether it's connecting with a partner or helping a client, sometimes it does take that consistent follow-up to let people know that you're here, you're serious, and you want to help.
I remember the phone calls. That's what I remember. You calling and just regularly calling me. And we finally did lunch and learns, and so we invited you in, I think, for a lunch and learn, and you came and you fed us and did a presentation. And then I knew that if you would come after me and stay connected with me like that when I send you people who aren't quite ready, then you are going to take that same level of concern and care and interest into their life. And that spoke volumes to me. So
some cliche lines that you hear throughout as you're coming up and getting trained in the industry. And one of them is that it's not a no, it's just not today. That's a big one, right?
Not now.
And so we talk about in this industry too, your pipeline, building the pipeline. And really what that is that we know that there are, first of all, owning a home is something that every American should have the opportunity to do, right to do.
American dream.
There you go. And so there's a pathway there and a roadmap for everyone to get them there. And so sometimes it takes a month, sometimes it takes a year. And I have worked with clients for over a year that are in homes now.
I've seen it. So, you've done it with my clients before.
Yes, ma'am.
And I love your logo. Or I think we've had a buyer seminar before where it was
that's right.
No buyers left behind.
That's
right. And I love that because that is, if you own a home, we were all once a first-time home buyer. And it's a scary process.
It is. And I think that's one of the things that I really love working with first-time home buyers. As you and I, we worked with big-time investors, self-employed buyers. We've also worked with many first-time home buyers that have no idea the process, where to even get started. And that's one of my favorite phone calls that I have is that initial phone call. I say, I have no idea where to even get started.
I love that.
We talk for 10 minutes, and after I say, how do you feel now? And I said, man, I feel so much better. I know exactly what this is going to take. And so that's what I've learned is that I just want to make myself accessible and get on the level with the buyer, connect with each buyer differently, and facilitate the needs that they really need in that moment of this process. So
I see that with you. So the client experience, just the client customer service, taking care of them, that I think is your superpower. It really is. And because you go above and beyond. Just last week we closed one and it was a absentee buyer from another state, a lot of moving parts. And she was packed, so she had no documents at all. And it was a 2-week close or something crazy like that. So
that was a challenge. Sometimes you get you'll get a new deal, and you'll think right off the bat, well, this is going to be.
Whoa.
But I think as we've gotten some of these tough deals done together, we've learned that, hey, if you just stick to it and do the work, we can get it done. And being the tough ones done has kind of made us believers in what's possible, right?
And this one particular that we're talking about, this one precious home buyer, yesterday we were in our sales team meeting at the office, and we showed footage of her cutting the red ribbon to her house and just her holding her buyer's basket gift. And these are returning clients. I've done several deals with this family, and they trust our care. They're investors. Right. We've done all kinds of things with them. And this was the mom moving here.
That's right.
To retire. And just that makes it worth it. She doesn't need to know everything that we're doing behind the scenes. She just needs to, she's moving.
That's it.
Across the country. She's packing, she's moving. She doesn't need to, that's where our experience shines. And
I think so too.
We do our job. We do it good.
That goes to say, I think you said it best, is that the buyer's having their own experience through this, right? Yes. Stresses and everything. Yeah. So I think it's important for us to remember that at the end of the day, we're dealing with a person, and try to make that experience, like you said, as smooth as possible. And I'll say that to the buyer in the beginning. Hey, my job on this is to try to take out as much of the stress of this as possible. And I can't promise there won't be some. I'm going to try and mitigate some of that for you the best that we can, and give them the best experience so that they can look back and say, not only did I get the purchase, not only did I get the home I wanted, but really the experience through it was awesome. And when they think that, they're going to think, well, if the experience was great, who was behind that? And our team, what we're delivering for them is, I think, is what is really making the big difference.
Oh, good. So tell me, I've never asked you this question. What got you into the mortgage business?
So I spent probably about 15 years plus in the hospitality industry, service and hospitality. I did everything from restaurants to private parties to catering, giving people this experience, and typically would just be an evening, one night. And I always had this feeling that there was something more that I wanted to do, maybe whether it get into ownership one day or management. And I had an awesome customer that came in one day and said, hey, have you ever thought about being in the mortgage industry? And it was funny because one of my best friends got into the mortgage industry years back, and was always telling me, hey man, you should check this out. And I never really pursued it. And at this point in my life, I said, maybe it's time to check this out. I keep hearing good things about the mortgage industry. Yeah. So I connected with my good friend Armando, and he was the first one to show me the ropes in this industry. Really taught me everything that you could need to learn to be successful. And what I realized was that right off the bat, I learned something quickly. Was I thought, hey, if I could take this 15 years of experience of really providing this intimate, service-oriented and heartfelt experience to these clients, maybe I can show them something new, something different, versus just coming in, crunching numbers and moving on. One of my favorite things that I used to love when I was in the service industry was if I had someone come in for a private party, or we would even put on we did a couple weekend retreats, and at the end they'd say, this was the best experience we ever had. Right. And that used to always warm my heart and make you feel good about that. And so that's what I strive for here. Right. Is that sometimes even the clients are like, I'm going to miss talking with you. And I do. Some certain clients I connect with and feel the same way. And I think that's really, for me, how I really fell into this industry and didn't know if it was going to work out, and knew that I found my niche and that I love doing this. And it's been great so far. So
let's talk about loans. Let's talk about the products. Let's talk about just the regular home buyer. And then let's talk about what you've really been helping me with lately is entrepreneurs.
That's right.
Self-employed. That used to be a case where it's like, over here on the side, sorry, you don't have a W-2, you're not going to be able to get qualified. That's not the case anymore, right? Yeah.
What we're seeing is that a lot of these, what is considered to be a non-qualified mortgage, right? A non-conventional mortgage, an FHA loan, USDA, a VA loan, right? These are, we call them in the industry non-QM loans. And these loans are really set up for the non-traditional buyer that may have some issues with tax returns, maybe a 1099 employee. As we know, as an entrepreneur yourself and as someone that is self-employed, right, is that we get a lot of benefits in this country when it comes to our taxes between write-offs and expenses. And so these are awesome benefits.
Right.
Unfortunately, when it
Doesn't
comes
look good on
paper, it's kind of this catch-22, right? And so when you go to get a loan, it can create a problem if you go traditionally. Well, what we found is that there are a lot of great opportunities. One of our personal favorites is something called a bank statement loan.
Yeah.
And with a loan like that, we do not look at tax returns. We don't even request to see them.
And so talk about that. The tax issues you're talking about, that is just low income, right? Because of the write-offs.
What it comes down to really is that it's really a simple calculation that we do, right? We're going to look at your net from typically a 2-year average, not what the business brought in, but what did you net, right? And so that's after expenses and write-offs, things like that.
And it can be very, very different. Yeah.
So that's understandable and it makes sense. And obviously this is the way it's designed to benefit the self-employed buyer. But in this case, as we mentioned, you can be detrimental when you're trying to qualify because like, I can afford this. I have money coming in and we look at it's black and white. We have to look at the tax returns. That's the way a conventional loan works.
How you qualify.
Exactly. Yeah. And so really what it comes down to is, like you said, it's a monthly qualifying amount that we're looking for. So monthly qualifying income. And that's what we're after. And so when we look at bank statements, we're actually able to look at 12 to 24 consecutive bank statements, and we can derive a monthly qualifying income based upon the deposits that are going in and use an expense ratio. And this can sometimes anywhere from double the income on a tax return. I've even seen it triple the income. Wow. And so now you have a home buyer that may have gone and thought, well, I can't get a home right now. I have to wait till next year till I get my taxes in order. I may have to file differently next year. And that's not the case. The rates are very competitive, very close to a traditional market rate. And I can promise you is that when the 1% is going after a loan, they're not presenting their tax returns to get loans. That's not the route they're going. And so we have those options for buyers. And we make it simple and easy, and we make it affordable too. That's the other thing.
That's it, right?
It's very affordable. It's not
some crazy interest rate. It's real close to a traditional interest rate.
And the other thing about it too is that what we found, and this is kind of ironic, is that it's actually easier on the buyer to get qualified this way. You'd be surprised that it's less documentation, it's less items. And lately, some of my traditional buyers that are going through, self-employed buyers that are going through the tax return qualification are like, man, these days buying a home, it's pretty intense. And when I've done it the other way, it's kind of like, wow, that was really easy. And so it's just nice to know that there are options out there to be able to reach a buyer and that maybe didn't have an opportunity before. And then when it comes to our first-time home buyers, we're taking a completely different approach. This will be a more traditional approach.
Before we get into that, let me ask you a couple questions about this bank statement loan.
Sure.
So if somebody's watching this, what's the simplified process? The first simplified, they call Geoffrey, they say, hey, I'm an entrepreneur. I don't have, have this. I don't have a W-2. I have money.
The big things that we're looking at, right? And this is someone who would qualify for a bank statement loan. You are self-employed. Okay. Your business has been in business for at least 2 years.
Okay, so employed. So give me some samples of self-employed.
Self-employed would be
a realtor,
a real estate agent, anyone that files a Schedule C. If you have an S Corp, we can use a similar approach if you receive a 1099. It's basically
like gig work.
If you're not a W-2 employee, most likely you're going to be able to qualify either using your 1099s or bank statements. That's all we look at initially to get that qualifying income. And we look at credit score like normal, right? We make sure that you have some reserves in the bank and these bank statements to get your income.
And what kind of down payment do people need for these loans?
So typically, anytime you're looking at an investment property, right? Traditionally, we're always putting 20% down. There are options that we can, in some cases, get as low as 15% down. But what we found is the sweet spot, right, when it comes to interest rate for an investment property is about 25% down.
What about primary home? So you can do these bank statement loans on a primary home as well?
Absolutely. Okay. That's another thing too. And so for a primary residence, we can go as low as 10% down. Okay. As we say in the industry, 90% LTV, loan to value. And we can go as low on a bank statement loan as 10% down.
So 10% down. So you're still going to have to sock some money away. So you do have that down payment and consider closing costs and that type of thing. But it is possible for you to
That's right.
quit burning money renting homes, right?
And that's the big thing, right?
Is it appreciation? You get
absolutely
ownership.
And that's what we're seeing is that I have investors that come to me that are itching to make that move, and they're even asking me, hey, what do I need to do with my tax returns? How much do I need to show to put myself in a position? And now we can give them another option today where they don't have to wait another year. People are really starting to catch the buzz of real estate investment. Mm-hmm. And what I get a lot is I'll get inquiries, or I'll have leads that come in, or people that'll reach out to me and call and say, hey, I'd like to become a real estate investor. And one of the big pieces that people don't understand is that amount down, right? That's the game changer.
You've got to have a chunk of money down.
That's
10%.
the big, at least for investment, you're looking at least 15% down, 25% is your sweet spot. Mm-hmm. Now, what I've found is I'll have people that are calling me first-time investors that they don't even own a primary yet. And they've thought to themselves, maybe I don't want to own a home, and they don't know much about it. And what I get an opportunity to talk with them about is that a great start to the journey of becoming a investor is getting your first primary, right? It opens up so much opportunity.
So you suggest investors to purchase their own home first and then before they invest?
Yes. If you do not own a primary, one of the beauties of that is, first of all, you jump from this 20-25% down that we're talking about to as little as 3 to 5% down.
Is that right?
So that's a huge game changer right there for primary.
It just shows the bank that you already have a loan, you're experienced, what it takes to, is that why?
Well, one of the biggest things is that some of my first time investors, they don't have 20-25% down. Right. You may be looking at a difference here, right?
Oh, I see. So if you get a home 3% down, then
and that's where you're talking about building appreciation, right? Being able to tap into some of that equity down the road to then either, what are we doing next? Are we upgrading to another primary, turning this home now into your first investment property, or are we now using some of this equity to go out and purchase another primary? For some folks, right, having $40,000, $50,000, $60,000 at their disposal, they may never have that opportunity with their traditional job or employment, but having access to that equity. Right?
That's a game changer.
Big time.
That's a game changer. I see it every day. People who've bought properties 20 years ago and they own them outright, and now that's $200,000, $300,000 that they just have available.
That's right.
And it's, if you own more than one, but if you own 3, you're nearly $1 million.
That's right. Touching on what you were mentioning earlier about this area, right? The greater Galveston area, county, Houston area is continuing to grow, right? And we're seeing appreciation on these homes. Even if you had an opportunity to purchase your first primary and you waited 5 years, inevitably in this area, your home is going to be worth more than you purchased it for. Your loan to value is going to drop. And you could, even in the first 5 years, have equity to tap into to make your next purchase. Right. And that's what I'm working with a lot of home buyers on right now. It's not just about this purchase today, right? We're trying to let everyone know that, hey, you can have the opportunity to become an investor. Mm-hmm. And this is the roadmap there, right? And how to get there, and try to simplify it for them. So
it's awesome.
So pretty exciting.
You seem like you like to invest. Do you have the investment bug?
Yes, absolutely. Really, because, right, we see it out there that
the opportunity. I've bought 4 properties. So one's a triplex I bought, and then 3 single family houses in the last 5 years.
There you go. Yep.
I never would have been able to do that before without information like this.
Yep. And that's the
as an entrepreneur.
It's amazing.
There's creative financing available.
There really is. And there's ways that we can help mention even buyers that have possibly been turned down by other lenders. I've taken second looks before.
Yes.
And gotten people in that have been told, no, we can't do that. And so I think that's what it is are you willing to get creative? Yeah. Are you willing to step outside the box, right? Mm-hmm. And investigate some of these products that maybe a traditional lender just doesn't have the time to look at. Maybe they're concerned that it's maybe a little scary to get into those products. But for me, I've taken the time to learn about these products. We've seen them successfully work. And now we have home buyers that have utilized them and purchased their homes. So
good.
Pretty awesome.
Yeah. Then let's go into the traditional, and then I want to hear more about Willow Bend while you're with them.
Absolutely. So for the traditional home buyer, or I really could say, right, for the home buyer that's purchasing their primary residence, and let's start with your first time home buyer. If you're purchasing a home for the first time, there's probably going to be a bunch of questions that you have, a bunch of items that you're not familiar with, right? And as we mentioned earlier, that is the place where I want to really excel with our clients and really make myself available to make this process and experience the best for them. And so we're going to look at all different availabilities to mitigate costs, right?
Costs. Is there? I get asked this a lot.
Of course.
Are there any first-time home buyer programs or
absolutely.
down payment assistance or?
We do have access to quite a few different first-time home buyer programs and down payment assistance programs. Okay. Those are awesome for the buyer that comes in and says, "I'd really like to get a home, but I just haven't had a chance to save quite what I need to." And then that's another big misnomer.
And you work together with these buyers. I know, because you've said, "Hey, Cynthia, do you think we can get some concessions? We need some concessions. We need $6,302. You're like down to the penny. We work together to make this happen for our clients. It depends on what the market's doing, but you get a solution for them. Huh? Is that what you're talking about?
Yeah, exactly. And that's where what we've tried to do in this market this last year is because this has been the perfect market for the first-time home buyer, right? And the reason being is because, sure, interest rates have been a little higher, and it's kept some buyers out of the market that have been waiting.
Right.
What that's done is it's allowed us to go to some of these sellers and say, look, hey, we have a buyer here that's been pre-approved, that's ready to go, but they're just short on funds for closing. If the bottom line for you makes sense and we could get a concession for this, we have a deal. In a lower, more competitive interest rate market, we're going to have a hard time getting those concessions. So it's interesting how this worked out in this market. And so that's just another example of us finding ways to be creative and help each in particular home buyer on their journey.
And we go with the market, whatever the market is.
That's right.
I always tell my clients, when's the right time to buy a house? That's the question. When it's right for you, when it's right for you and your family to meet your goals, and then let us go to work to make it happen.
That's right. And some people even say the best time to buy a home is when you can afford it, right? When you can afford the payment. And the reason is because if you can't afford it, at the end of the day, for the first time ever, the money that you're making and paying towards your living expense is going to your investment.
Right.
And no matter how you slice it or dice it, no matter how you say, oh, well, my rent is going to be a few $100s less than my mortgage, or I'm not ready to take that step yet. At the end of the day, every check that you pay towards your rent is going to pay someone else's mortgage.
That's the tough reality that
is.
When you hear that, oh man.
Yep. So say if someone asks, like, when should I purchase a home? When's the right time for me? Do I wait for the interest rates to drop? Well, the first thing you should do is figure out how much purchase power you have. And the best part about that's a free inquiry. You can call myself and I can walk you through exactly how much home you can afford and what is your monthly payment going to look like and what's it going to cost out of pocket for you. Yeah. And that inquiry and investigating that costs zero money to the prospective home buyer.
So can you help people anywhere in the nation, or are you just regional, or because we're here outside of Houston, Texas?
That's right.
South of Houston.
So we can help anybody in the state of Texas, and then we are licensed in almost 12 other states as well. Really? But as far as this state is concerned, and I get those calls a lot. Can we do a home in Austin and Dallas? Yeah. Although we are here, this is our hub here in Galveston, we can help anywhere in the state of Texas.
That's good to know. Yeah. Because I know when I'm watching YouTube videos and I hear some information that's like, oh, okay, I like this guy, I would like to reach out. So we'll put your information in the comments or maybe on the lower third so people can reach out to you. And I hope they do, because I tell this, I think I referred you to somebody yesterday. And I said, this is who I would use if I was to get a mortgage. And actually, I have you working on something for me right now for you. Right?
That's right.
Tell me more about Willow Bend. Why you are with Willow Bend. We were talking a little bit about this before the show. So
Absolutely. Last year, 2023 was a pretty interesting year for our industry. It was a rough year. And I'm not sure the exact figures, but from what I've heard, just in 2023 alone, I believe over 100,000 real estate agents and mortgage loan officers from each side of the industry left the business, right? And so there was a lot of shifting going on last year and a lot of movement. And towards the beginning of the year, this year of 2024, I came on with Willow Bend. I had been talking to a couple different companies, and I really kind of was coming into my own and trying to find the best place where I could take my experience that I've gained in this industry and plug in to a place where I could be the best that I could be for my clients, give them the best overall experience, knowing that this is the part I'm going to bring to the table. And now what help can my company bring? And so my first conversation actually with Willow Bend was with the CEO of the company, Craig Schrank. And when Craig and I talked, the first conversation we had, we probably talked for about an hour and a half.
Whoa.
Based on that conversation, I knew like, this is where I can make my home. This is where I can feel like this type of mindset, this desire to connect with the clients and having to be the best place to originate a loan and to buy a home.
Yeah.
And so when I went up there for the first time and I got to meet a lot of the folks that had been there with that company, I started realizing that it was like, oh, here's Alexandria. She's been here 10 years. This is Jeff. He's been here 7 years. This is Macy. She's been with us 10 years. And so I realized, I said, man, there's a lot of longevity
years, 17
here.
years. When people stick around, there's a reason why.
And it really felt like a family there. And for me, although I am here in Galveston and I work outside the corporate zone where we are in Plano, they make it feel like, I'm there all the time, that we connect via Zoom calls and always make themselves available for me so that I can be that branch outside of the corporate area to connect with people all across the state. It's really been the best place that I've ever originated loans, and my clients are very happy with the experience. So
I see that front and center. I do. Yeah. I've had experience with it. Let's talk about interest rates. We can't have a lender here on To Live and Buy in Texas without talking about mortgage rates, where they've been, where are we going?
And that has been the big buzz, right? And the big topic. And it's been that way ever since they dropped. We had the big drop, right? Back during COVID times. Really what we're starting to see is that time, really, that was the unprecedented time, right? Was that we had this worldwide pandemic going on and rates dropped in a way that we hadn't seen in years, right? And a lot of people are saying that we probably won't see again for a long time.
Right. Yeah.
And so I think part of this last couple of years has been mitigating and helping buyers navigate through this market and this extreme rise that happened so quickly. And what we've seen overall, when you look at this over like 25-year span, is that rates for the last year or so have been fairly moderate, right? But it just seems like such a big change from the recent. And I think that's been the shock.
When it got down to 2% and 3%, now it's 6%, what? Or it got up to 8%.
Well, what people saw was that they saw what they could afford during that time.
Yes.
And that's, I think, been the biggest change. And I understand that. I mean, it's like, wait a second, 2 years ago, I could easily afford this home, and now I'm not even remotely close. And yes, that's how powerful a rate can be. With that said, though, as we talked about through this conversation, the rate is important, right? The payment is so important, but at the end of the day, that's a part of it. A big piece is your equity that you're getting a chance to build, right? Your investment. And so the buzz that we're starting to hear now, right, is that this is really what it comes down to is it's very speculative, right? The rates. And if, as we make jokes in this industry, if any mortgage lender had the answer to rates, we would not be mortgage lenders, right? We would be in the stock market and try to do that. And so what we can do is we can follow the news that's coming out. We can follow important economic data that gets released, whether it's employment and labor reports, inflationary reports. These are items that tend to really affect the rates. And so right now, to answer your question, where are the rates going? everything is leading towards rates starting to trend in a downward direction. And so the next cut that's being speculated or being anticipated is supposed to come in September. Now, we have heard that earlier this year, we heard cuts were going to come sooner. They didn't. And so I don't know, that's the real answer.
We don't have a crystal ball. That's
Right.
what I tell my clients. We don't have a crystal ball, but we can see.
What we can show you is we can show you what you can afford today, right? And we can even project and say, well, if the rate was to drop, where do I need to be? Where does the rate need to be in order for me to afford?
Right.
Now, the tricky game you play with that is the home still going to be the same price when the rate drops?
Right.
And what kind of competition am I going to be up against? One thing that we've been hearing a lot over this last year has been, hey guys, when the rates do finally drop and the market gets flooded, what are the offers going to look like?
Right.
Are people going to come in like they did during COVID, right?
The multiple offer situation where people that were working with loans didn't even have an opportunity.
Right. And if you're just sitting in the background right now and waiting for rates to drop, because once the rates drop, you're going to have a lower payment. Do you know the difference? That's a question.
What's the difference in the payment? Right.
I have a client right now that was set on a 1/4 point difference. She had her heart set on 6.75, right? And this was a little while back, and we were showing the difference between, we were showing 7 at that day. And we wanted to get the 6.75.
What was the difference?
$16.
$16
a month on that loan amount. And don't get me wrong, every dollar counts, right?
Of course.
And that information, and that needs to be in the buyer's hands.
It does.
So that they can make the decision, right?
Just crunch the numbers. I do that with my clients all the time. It's about the bottom line. You can get there different ways. To get those interest rates down, especially in more of a buyer's market that we're seeing right now, we're sitting here today. It's August 2024 in Texas, and there's a lot of inventory. There's a lot of negotiation power. And when days on market are higher, that means sellers are a little more inclined to offer incentives. So what we could do is ask the seller for concession to buy down your points.
That's right.
Right?
Yep.
To buy down your interest rate. Now, it's a hefty chunk to buy down those points, but what if 1 point, if you go for the concession and ask the seller, hey, listen, love this house, real buyer, qualified, but will you offer incentives to buy down my interest rate?
That's right. And we've seen that multiple times.
What price to buy down an interest rate?
So typically, the easy math on this, right, is we focus on the loan amount, right? On the mortgage side, purchase price is important, but at the end of the day, after you put the down payment, now we're left with the loan amount, right? So when you hear people say, I'm going to buy down my rate, I'm going to use 1 point to buy down my rate. Essentially, that point translates into 1% of the loan amount.
Right.
So if you multiply 1% times your loan amount, you will have the cost of buying down the interest rate with 1 point. And depending on the loan amount and the market and where it's at, that 1 point can bring your rate down a certain amount. And that's what we can show the buyer. The big thing that I'm working on with buyers is we are looking at, is this a viable option for me? Does this make sense too? Because that's another thing, right?
Or will it just make sense to negotiate the price down? If you buy $300,000, if your loan is $300,000, you go to the seller and say, hey, we ask for the 1%, $3,000 concession to buy down that mortgage rate. I mean, that's...
Yeah, you may think to yourself, well, $3,000, it's quite a bit. Well, as a buyer, you actually have a right to a certain amount of concession from a seller. If you're using a conventional loan and you're putting the minimum down, traditionally you would have about 3% of the purchase price that a seller can contribute. So if you're at 3% and you're asking for 1%, you see that's could be very doable.
Just be,
If you're using an FHA loan, you could get up to 6% of the purchase price as a concession or a contribution, as we call it. And so there are a lot of great options out there. And so what I've realized, and we're kind of getting into the weeds here on this, is that what I really specialize in is, especially for a first-time home buyers, can you make sense of all this for me? Can you put this into terms, into a way that I can understand this and also have a true truly be able to conceptualize all this, not just, okay, I think I got it. Like, simplify this so that I can really understand it and make the best decision for myself and my family on this.
Yeah.
And one of those things too, and just one last thing I'll mention about the rates is that, okay, we're in a place now where inevitably everyone has been talking about this. All the big talking heads, the financial gurus, rates are going to trend down, right? So inevitably, that means if you own a home currently right now and you have a higher rate, you'll have an opportunity to refinance, which also means if you purchase the home now at a slightly higher rate, in a matter of 6 months from the time you purchase, you would be eligible to refinance.
Okay.
So maybe today the payment's a little higher than you would be comfortable with, but if the rates come down over this next year, that would get you in position to have a possible refinance. So there's a lot of options there. And I think the biggest thing, and this is again, just to stress this, is that there's nothing to lose reaching out to someone like myself to investigate this. There is no financial obligation. You can find out all your numbers and what you need to do. And you may be very pleasantly surprised.
And so do you pull their credit? Is it a soft pull on their credit?
Good question. For us at Willow Bend, we always do a soft pull on the credit initially. This avoids a hard inquiry, or as we say, a ding on your credit.
A ding, yeah.
Until we're ready to go under contract and make the move, we won't pull the credit. One thing I will say too, and this is nice to know when you're going through the mortgage process, getting even a hard inquiry from a mortgage lender, it's not nearly as detrimental as, let's say, when you go to purchase a car, right? And and reason being is a lot of times when you purchase a car, you'll have multiple banks pulling your credit. And you could have at one dealership, you could have up to 6-7 inquiries, right? Where this is just the one. And so I think most buyers, when they see that, are like, it's temporary and it's not really that big of a hit. So, but even so, we take that secondary approach where we just say, hey, we're just going to do a soft pull. So there's no hit anyways.
So good. Yeah. Thanks for coming out.
Yeah, it's great to be here.
It was a good conversation. I love just hanging out with you and just talking with you. You're so knowledgeable about the whole process. And if you're buying a home or if you're considering it, the very first thing you want to do, contact a lender, somebody that you can be open with, that you trust, that you have a good vibe with. We know we all have apps on our phones, all of them looking at properties. We're looking at HGTV. Talk with a lender to find out what you can afford and when your time is right. And just start the process. We want to demystify it. We want to take the fear out of it. It's approachable. It's not so far off. Just go for it. Give it a try. Buying houses isn't for the weak of heart, but you're strong and you're able to do it.
Awesome.
Thank you so much for joining us today to Live and Buy in Texas, filmed in our Hooks House studio in Galveston, Texas. Make sure to subscribe and share this video with somebody who may be interested in living and buying in Texas. Cynthia Quarter.